The golden era of tech just hit a massive speed bump. Now, as we enter the final week of March 2026, the tech-heavy NASDAQ composite has officially plunged into correction territory, falling more than 10% from its recent peak. Now, this isn't just a minor pullback, it's a violent repricing of risk as the conflict in the Middle East enters its fifth week, sending shockwaves to the global supply chain. Now, the data points a sobering picture for growth investors. Last Friday, the NASDAQ closed down 2.15%, capping off its fifth consecutive week of losses, the longest losing streak for the S&P 500 and NASDAQ in nearly 4 years. Now, chip stocks are bearing the brunt of the sell-off. The PHLX Semiconductor Index, SOX, plummeted over 4% in a single session, with market leader NVIDIA hitting a 3-month low near $167. Apple and Microsoft haven't spared either. Apple and Microsoft haven't been spared either, with Microsoft's forward PE ratio collapsing from 31.7 to 20.2 in just 5 months. Now, why the sudden exodus? It's a toxic cocktail of macro headwinds, with Brent crude oil prices having surged over 60% since the start of the conflict. The market is bracing for demand destruction. Investors are fleeing high valuation tech names as the 10-year treasury yields approach the 4.5% mark, fueled by fears that war-related spending and $40 trillion in U.S. debt will keep interest rates higher for longer. Now, even the retail sector is signaling a red flag. Now, with Amazon dropping 3.1% as rising gas prices threaten to cannibalize consumer discretionary spending. So, think about it. Is this the generational dip you've been waiting for, or is there another 10% to fall before we find a floor? Historically, oil-driven crises take about 2 months to bottom out. Now, are you buying the fear, or are you moving to the sidelines until the 10-year yield stabilizes? Let me know your move in the comments. Are we at a peak fear yet? Follow the daily data-driven updates from the floor.
Headline: Tech is crashing. Giant. Is this the 10 dip you've been waiting for? The golden era of tech just hit a massive speed bump. As we attest that composite 26 as a violent repricing week of fifth week, falling more than shockwaves through the global supply chain. The data paints a sobering Isthis. Last Fridays are bearing of the spirit of risk as the longest loser forward in a single 7, with market leader NVIDIA PE ratio for than a 3-month low in just 5 months. Why the sudden exodus? It is a toxic cocktail of macro headwinds. With the Brent crude oil prices having 6 stings, the market is bracing for demand grow head mark. With Microsoft's forward PE ratio collapsing from 31 rates and higher for longer.